Hey, welcome, guys. Welcome to Mortgage Monday with Melissa with the Walker Realtor Group, and we have Coy Woods.
Hello.
And we're going to be answering all your questions you have about mortgages and starting the home buying process. So, Coy,
Yes.
tell us a little bit about yourself.
Well, I've been in the mortgage business for 16 years.
Oh.
I enjoy doing it. I enjoy assisting clients,
Mm-hmm.
and I enjoy relationships
Yes.
with clients and referral partners. Definitely.
Yes. Well, one of the things with the Walker Group, I always tell people our family is growing. So everybody that's my client really becomes my cousin.
Correct.
We are related. So
Good.
this is Cousin Coy, y'all.
Hello.
So Coy, what are some of the most common questions you get from clients wanting to start the home buying process?
One of the most common questions that I receive is, what is the lowest credit score that we can get a loan with? The credit score is very important.
Mm-hmm.
I will tell you that on government loans, FHA, and also VA loans, the lowest credit score that you can obtain a loan with is 580.
Okay.
We also have the accessibility of other government loans like USDA, and also conventional financing. The lowest credit scores for those will be more of the 600 and 620.
Okay.
The important piece of that particular question in individuals and clients asking about what's the lowest credit score is, there are also other perspectives of the credit that
Okay.
have to be adhered to, and that's more of the credit profile.
Okay.
Just because we have the credit score doesn't
Mm-hmm.
mean that we meet the credit profile guidelines to be able to obtain an actual home loan. So those are the lower scores, but there are also other pieces of the puzzle that we have to ensure that we put together.
So when we say credit profile, do you mean like the history, how long they've had credit, if they've missed any payments?
Correct.
Okay.
Well, it consists of them all, as far as pay histories, collections, charge-offs, foreclosures, also bankruptcies, the ages in which those particular items actually happen,
Okay.
and when they were complete.
Okay. So it's not just that 580 we need to
Correct.
focus on.
Correct.
There's
Correct.
other. And so the best thing to for clients to do or prospects to do is to actually have a loan officer, you pull their credit so that you can tell them how to get to where they want to go.
That's correct.
Okay.
Creating that initial profile is very important. It's a very important aspect of actually understanding where you stand and know where you're going.
Okay. Okay. Well, awesome. Okay, what are some other questions what's another common question you get?
Maybe another common question I receive is, maybe, who should I speak with first? Should I speak with a real estate agent and start looking at homes, or should I go to an actual lending institution to get pre-qualified? I would not tell anyone one way or another because it's definitely their choice to make. But at the end of the day, we have to make sure that we remember, if we're going out with a real estate agent looking at homes, say for instance, someone tell you, or you're looking at a website and thinking, okay, well, this is the mortgage payment that comes along with this particular price point, and some of the information that's online may not be very, very accurate. It can give you an idea, but every situation is different, and we would not want clients going out looking at homes, getting sold, falling in love with homes, if that particular price point does not end up being where they can actually qualify
Right.
for. So it's important to make sure that you understand what your true buying power is before you really go out and look for specific houses. Now you can go out and browse and see different floor plans that you may be more interested in, but I would not say just really, really going to look until you understand what your buying
Yeah.
power really consists of.
Most of the time, I always tell my clients that we need to know what our buying power is,
Correct.
because if we do find a home that we can put an offer in, if you haven't even went through that pre-qualification, that pre-approval process, then someone else that has already come in stronger by having that pre-approval, their application is going to be looked at, because a lot of times the agent will not even accept the application if they don't have a pre-approval.
That's correct. That's correct. That's
So
correct. That's very
it's
correct.
really best to get
Pre-approved.
pre-approved first.
Correct. That's correct.
Absolutely.
That's correct.
Absolutely. Okay. When you talked about the product earlier, what do you mean about product as far as?
Well, when I say products, because there are certain, well, there are a lot of different loan products. Traditional financing consists of conventional loans, the government loans, as I mentioned, FHA, also USDA and VA home loans. Those are all traditional products. What we want to make sure that we understand is there are additional loan options outside of those traditional products. Those particular loan products are not common loans, so we call those non-QM. So those are non-qualified mortgages that individuals that have different situations, have had a different past, have inconsistent income, or not filing all the income on their tax returns. They have the accessibility to obtain a loan.
So like a hairdresser?
That's correct.
Okay.
That's correct. I mean, anyone self-employed, say for instance, they try to minimize how much they show on their actual tax returns to minimize how much they pay the IRS at the end of the year.
Not that we do that.
Not that we do that, but there are different ways and factors that individuals file their income, and we just want to make sure that the options and availability is there. Though we have to make sure that we remember, if it's not traditional financing, the terms will be a little bit more stringent. So when we say stringent, it could be a larger down payment, it could be a higher interest rate, but we have to understand it's not traditional financing.
Now, when you say down payments, do we always have to put down 20%?
No. VA loans, USDA loans are 100% financing. As long as and with the VA loans, with the eligibility and the certificate eligibility of being a veteran, allows you to have 100% financing. FHA loans go down to 3.5% down payment. In conventional loans, you can get actually obtain a conventional loan with as low as 3% down. There are also different programs, and I know you want to make sure that we remember not just the down payment process or the product is important, but there are programs for individuals that may need some style of assistance. And we want to make sure that we put that in perspective too, because everyone does not have a certain amount of money put down that would be sufficient for a normal down payment. And with those programs, all of those programs really depend on where the property is located. And also that they also have qualifying availability and guidelines for the actual individual as well. So it just really depends on where the where the property is located. Because there are property eligibilities for a lot of the programs out there, and also with the client as well.
Is that citywide or is that county? Like, do I have to live in, say, Sugar Land, or can I live in Fort Bend, period, and still be able to get that, or does it go by?
Well, it just really depends. They have Harris County programs out. There are City of Houston programs. There are also statewide programs. There are Texas City city limit programs, and one of the larger programs that individuals are actually focused on right now are more of the state programs, and the reason being they're a little bit more flexible with income parameters. The area medium income limits that those particular programs have a little bit tighter when you're dealing with the city and some of the county programs, and the state is a little bit more lenient.
Okay, well, awesome. And our last question is, tell us the difference in FHA, conventional, and we know VA, you need veterans. So FHA is a Federal Housing Authority or administration.
Yes, correct.
And conventional is?
So conventional is just based off the profile of the whole client qualifying, and also because everything is risk-based. And when you're dealing with conventional financing, when we say risk-based, it's going to be based off the credit score, debt to income ratio, the loan amount. Those are large factors on the availability of qualifying for those particular loans. So when you're dealing with the FHA loan, it's a little bit different, because as long as the actual client meets minimum guidelines of that particular product, they can obtain financing, because FHA is going to insure the loan because
Okay.
FHA is a government insured loan.
Mm-hmm.
So with it being a government insured loan, as long as you're meeting those particular,
My mom's gonna have to wait.
but as long as you're meeting the actual guidelines for the actual loan, you can obtain financing with FHA.
Okay.
And again, conventional is risk based, so it's just based on the actual profile of the client to ensure as far as what their minimum down payment requirement will be,
Okay.
and also what their interest rate in return will be.
Now, is either or interest rate lower?
Well, I mean, they fluctuate, definitely. The higher the credit score, the more money you put down, definitely conventional finance can be the direction that you would want to go. Because FHA, there's not a large difference in credit score and down payment for those particular rates because, again, it's based off of the being insured by the government because it's a government insured loan.
Okay.
VA is totally different. The good thing about VA is there's no mortgage insurance required. So
Okay.
as long as you have the eligibility with VA, there's no mortgage insurance required, and the rates are just as good. So actually, your mortgage payment can be a little bit less.
Because you don't have proper
No,
mortgage insurance.
no mortgage
Okay.
insurance required. That's correct.
Well,
That's correct.
awesome, awesome. So, Coy, can you leave us with 1 or 2 tips?
1 or 2 tips. One tip I'll always tell everyone: be cautious on what you're doing and how you're doing it. And the reason I say that is, everyone has a he say, she say, or, this is the way that you do it, or you need to do this. Everyone's situation is different.
Absolutely.
You want to make sure that you're dealing with individuals that you can trust and count on.
Yes.
And I think that's going to be one of the most important pieces. Don't just be sold on wolf tickets is what I consider.
Okay.
Because everyone is here to be able to assist you as far as, especially you and I. I mean, we're real big on relationships. We're real big on making sure that the client is comfortable. Some individuals, all they want to do is tell you to complete the application and let's move forward. But they have to make sure that you give them a chance to explain their situation, explain their circumstances, so they can understand. Okay, how can I help you better?
Yes, absolutely. Well, thank you for that, Coy.
No problem.
Well, guys, please go ahead, share this video, like it, and ask your friends to come back and watch us. So, Coy,
Yes.
as we close out with the Walker Group,
Uh-oh.
Chawini,
Chawini.
made you smile. Thank you guys for tuning in. We'll be back next Monday.